Welcome back to Cash and Sass, the podcast where we ditch the shame, talk real numbers, and build bold, bankable wealth without sacrificing who we are. I'm your host, Lisa Marie, fractional CFO, money mentor, and the sassy wealth queen behind Transcendent Wealth Company. Today, we're talking about something that silently runs way too many lives and business. You ready for it? Debt. My guest, Andy Bennetts, is a debt-to-wealth specialist who helps families and entrepreneurs eliminate debt faster and build lasting wealth without budgeting gimmicks, refinancing tricks, or sacrificing their quality of life. I am all for that. Don't know about y'all, but I am. This episode is about faith, freedom, and financial flow and how to stop letting debt dictate your decisions. So as I say, and y'all know, we're going to dive into it, and it's going to be just candid conversations, okay? All right. So you say that debt is not a life sentence. Where did that belief for you come from?
That belief came from a chance encounter with somebody that shared with me this financial GPS that I now preach on because I think it's the coolest thing in the world. And it's one of those things you don't know what you don't know. And that sounds such a cliche thing, but there's a lot of people that are kind of closed off to new thinking because, hate to break it to them this way, there's a little bit of ego involved, and they're like, no one can know more than me on this subject, or surely I would have heard of this before, or there's no way it's too good to be true. All of the different things. So I fought through those objections and those mental hurdles that I had to get through and open my mind to the possibility of debt not being a life sentence and there being a faster way than what the bank shows you. And the punchline is this: it's proven. We've done it for 20 plus years and we can guarantee it. So stick around because I promise there's some really, really good things. And if you're in debt, there's a faster way. There's a better way.
And a lot less stressful. What's the biggest lie, though, that people believe about debt?
Well, not to go back to the previous statement, but I think this idea that it is a way of life and that we are going to live with debt the rest of our lives. I've met with many, many people. One that sticks out in my head is this lovely older couple here in my community that when I met with them, I said, so what's your retirement plans? They're 61, 62, just bought a brand new house, which that's another conversation. But I said, what are your retirement plans? And they said, well, just don't die. Like, we're going to work until the day we die. Hopefully we'll have everything paid off by then, but probably not. And that's just I don't know. I just feel like that's such a sad existence. And again, I think we've conditioned ourselves, or we have accepted that. Maybe better to put it that way. We have accepted the lie that you have to live in debt.
The society has given us that we have to. Yeah.
Exactly. And it's not true. And another thing that I found very interesting is that this is a very American issue. This is not a worldwide issue. Most countries in the world don't live on debt like we do.
Yeah. And one of the things, especially in businesses, I tell people that there's good debt and there's bad debt. And when I say good debt, understand, for everybody listening, I do not mean it's okay for you to go run a credit card maxed up to the limit on frilly-nilly shit. Okay. That's not what I'm talking about here. That is not what I'm saying. What I am saying is you have multimillionaires that leverage debt.
Correct.
And if you use it correctly and strategically and intentionally, then it's not always bad. And I'm also very, very open. And I have even stated that if it wasn't for my business line of credit in 2024, my business would still not be here. Okay. Be point blank. That is what kept me in business. Now, am I paying it off? Absolutely. Am I doing it differently than what the bank says? Absolutely. And I did go into debt so that my business would stay running. That is the way it is. That's not necessarily bad debt. So you got to understand that a lot of it is going to come down to, one, how you see it yourself, and two, what you're doing with it. If you cannot, under any circumstances, if you cannot control what you use that credit card for, if you're going, every time you turn around, you're swiping, I'm going to tell you what I tell my clients. Go stick it in a Ziploc bag and stick it in the freezer or shred it, but don't use it.
Right.
Because right now you're not able to be responsible and be the CEO or of your life or the business in order to be where the debt's not all bad. Okay. Just got to put that caveat out there because I do believe that there is a difference. Okay. So this comes into what I'm saying, because when I say intentional and strategic, It's money management. And
Mhm.
so I'm adamant. I want my listeners to hear someone else say it besides me.
Yeah, you-
So it won't be just me saying it.
right.
What role does attention, okay, and behavior play in money management when you are managing your money or managing the debt and do you see what I'm saying? And being that strategic with it.
Yeah. No, it's everything. I mean, and again, it's one of those things like it's not sexy, but it is smart and it is wise, right? I mean, the idea of like freezing your credit cards, that sounds very Dave Ramsey-ish, right? It's all about self-control. Like if you cannot control your spending habits, whether that's an Amazon fix or a Starbucks fix or whatever the case is, and you have this amount of money, but you're spending this amount of money, you have got to figure out a way to plug the holes and stop the bleeding, as it were, to the point where you can get to the point where you've got some discretionary income to start chipping away at that debt. I mean, there's no magic wand. And what we have is an amazing system that is leveraging math in a way that no one else does. However, it does come down to, like you said, it comes down to moment by moment decisions, right? Am I going to choose to do this thing that I want to do, even though it's not a financially responsible decision? Or I mean, it's delayed gratification. You remember like the
Right,
marshmallow,
right,
right? Like
right,
one
right.
marshmallow now or two later. Can we wait? I don't know. It's hard, but it's the right thing
Yeah,
to
I
do.
I I tell people all the time that, when you're in life or business, when you're building what I call the money roadmap, you're saving, you're looking at your money and you're saying this or that. So do I
Mhm.
want to save for this or do I want that? Right?
Yes,
It's your choice.
correct.
And like he says, instant gratification at Starbucks, or
Mhm.
do I want to do Starbucks only twice a week instead of 5 times a week? And then I take those other 3 days worth of Starbucks and I
Right.
put them in another, a savings account for whatever it is I'm wanting. That's where the intention comes in. And I think it's really, really important that we have to understand that you have to be Andy can give you all the tools. I can give you the tools. I can give you the know-how. And if you're not going to do the work, then it ain't going to work. Right?
You're right.
I mean, that's just, I sit down with my clients all the time and say, okay, we're going to build this money roadmap out. It's going to be aligned with your values, your goals, what
Mhm.
your lifestyle. We're going to choose. And if it is Starbucks twice a week, we're putting that into that money roadmap. We're
Right.
intentionally plugging the things so that you don't have to change your lifestyle. And you
Mhm.
still have to do it. And some of it might be pulling some things back when things get tight, but you have to be willing to actually do the work.
Right.
Otherwise, it's not going to work. And one of the things that you talk about is charging your worth as a stewardship. Can you explain that?
Yeah. So, I mean, I'm a Christian, so I think that all of the blessings that I have are of God. So I need to be a good steward of those. There's the parable of the talents, right? The master gives 5 talents, 3 talents, and 1 talent, goes away, comes back and finds the person that had 5 doubled that to have 5. That was a good, wise investment. Good use of that, good steward. The one that had 3 doubled that. The one that had 1 was an evil servant. That's what he called him, an evil servant, because all he did was bury it, and he just gave him back the one thing. He said, well, at least you could have done, in our vernacular, put it in a high yield savings account so we're getting something back, right? At least get some interest on that. So I feel like being a good steward of the money, and I'm not sure I'm answering your question directly here, is just being wise with the resources that you have and using them in the best possible way, the smartest way, not being frivolous. I do ascribe to the idea is money is a tool. Okay. It's not something you have to hoard away. It's not something you have to stuck under your
Absolutely.
sheet at that kind of stuff or the mattress. However, so use the things that you want to do, go on the trips, this kind of stuff, but be intentional about it. Have the roadmap. I'm loving the synergy here because we haven't got there yet, but I call it a financial GPS. You have a roadmap. Seems like we've got some
And
good.
I call it a roadmap because of the same reason you probably say GPS. When you get in your vehicle and you go somewhere, nowadays, if you're going somewhere you don't know, instead of a map, you pull up your GPS. You're pulling up a road map. You're pulling up your GPS, and you're not going to just go along the way without having something to let you know when there's detours. That
Correct.
money roadmap is to serve the exact same way, just
Right.
with your money. And
Correct.
I think that's what you're talking about with the GPS too, right?
Absolutely. Absolutely. And
Yeah.
I very much lean into that analogy because everyone can relate to it, right? I joke, but it is in all seriousness, I am the worst at directions. And my wife can attest to it. We were at a basketball game for my son last week, and we had been to this place 2 or 3 times. I'm like, I don't need to put it on GPS. It's embarrassing how quickly I get lost. So I speak it from very much a personal standpoint. But it's the same idea with your money, right? I mean, I'm old enough to remember mom and dad in the front looking at the paper map, trying to figure out where we go. The bad part is, what if you get off track? What if the path that you were supposed to go on is blocked, or there's construction? What if there's weather? What if there's all these kind of things, right? The pitfall of the paper map is that it's not dynamic. I love our financial GPS is dynamic, minute by minute, choice by choice, and it gives you the foresight, to your point. If I make this decision right now, what is that going to cost me in the future? We've got a true cost feature. It shows you exactly how much, if you're buying this grill or whatever the case is, how much is it really going to cost you, because you're not putting that towards servicing your debt or getting out of debt. So I love the minute by minute aspect, the dynamic nature of this. When windfalls come in, let's redirect and get you out of debt as quickly as possible. When the car breaks down, that's fine. Now we're just your date is going to shift out a little bit. Like a GPS, we have a guaranteed debt-free date. So as long as you're following this roadmap, this GPS, this is the guaranteed date that you're going to reach your debt freedom. Pretty unique, pretty amazing.
And if you follow what I say, which is have a savings account specifically for vehicle savings, specifically for house, and you've got stuff in the vehicle. When the vehicle needs to be serviced or it breaks down, you've got money in that account to help you be able to do those things. Because I live in a state that we have to pay for property taxes on our vehicle. And like I tell everybody, most of us just don't have $800 to $1,000 just laying around in our monthly budget. So what I do is I make sure that is certain amounts going in there every month, because I estimate what I know the property tax is going to be. So that way, when the property tax comes up, which was up in September, I was easily able to pull the money and pay it.
Correct.
I didn't have to put it on. I did. Excuse me. I put it on a credit card to get my points, but then I turned around and paid it. Exactly. So, but I didn't have to go into debt to pay it. Is what I'm getting at. Mm-hmm. Okay, I am interested in. You showed a cool little thing before we went live. So I'm putting this in because I know about this cool thing.
Yes, right.
Can you show an example of what somebody can do if they have, I don't know, credit card debt, let's say 3,000 or 10,000, just an example of how the thing is, and something that they can look at and walk away from today that they could actually go and run and do.
Absolutely. Can I start with two things to kind of set up conversation? Is that all right? All right, so here we go. I'm gonna disappear, but I'm gonna bring on this really cool thing. So those that are only listening, I'm sorry that you're not gonna get to see the cool thing that is showing on the screen. So what this is this a debt? This is a debt load. Okay. So Lisa Marie, let me ask you as an expert, if I were to show you this debt load and then 9 of your colleagues, all financial experts, how many opinions do you think, out of 10 people, how many opinions do you think you would get on how to pay this debt off?
10 of them, at least.
Exactly right. So my follow-up question is, do you think that there is a mathematical fastest way to pay this off?
Yes.
Okay, so there we go. So that's what I operate with, rather than opinions or theories or this kind of stuff. Again, all of them will help you to pay things off faster, but why not just go the mathematical fastest route? So that's what the financial GPS does. It incorporates all of these great things like float and leverage and snowball and avalanche, all of these things that we've heard about for a long time, but it incorporates that because it's very, very complex. How a credit card is factored interest is different than a mortgage, which is different than a student loan, which is different than, you see what I mean? There's all these different factors. And I don't know about you, but I don't have the time nor the desire to spend all my day in front of a spreadsheet figuring out what's the fastest way. So that's kind of the idea, right? Another thing, again, just to kind of, I don't know, show off a little bit of my fun little tool here, right?
Showing off. And for those of you who are listening, all you need to do is run over to YouTube, to my channel, and you can go and watch the video so that you can see this. Still listen on the Spotify or iTunes, but you can run over to my YouTube channel, make sure you subscribe, but you can watch this because this is really cool.
Very good. Okay, so what I'm showing here for those that are still listening is the idea that when you go to your bank and say, hey, I'm ready to buy my dream house, they're like, that's great. We want to keep the terms as low as possible here. So we're going to give you, because we're so nice, this is the bank talking, we are so nice, we're going to give you a 30-year loan and we're going to spread out those payments because we care about you and we want you to be able to afford this. You can hear my irony in my petition, right? So what the banker does as soon as you sign this payments is they put you on this long, windy route. Again, for those that can't see it, it's got this little circle looking thing that when you start your journey on your mortgage, they're going to send you on the scenic route. Let's put it that way, right? They're going to put you on this long scenic route that's going to take you 30 years. But here's the thing. And again, you can't see it for those that are not there, but about 21 years in, I'm going to give you the answer here to the question. 21 years in is where you are paying more in principal than interest. Think about that for just a second. 21 years, you are paying more in interest that is just goes to the bank. There's another factor, which I won't go into right now. It's called the TIP, total interest percentage. It sounds like TIP. It is a TIP. That's basically what we're giving the banks, is a bunch of money up front. That is the total amount of what they're getting. This idea that your APR, I've got a good APR, I've got 4%, whatever, that's not what you're paying, okay? On a 6% 30-year loan, it's 115%. 115% of what you borrowed is what you're paying back. That's the TIP. That's the total interest percentage. So again, I realize that's not the questions you asked, but I wanted to flex a little bit and use this opportunity to kind of educate a little bit, because I didn't know that a year ago when I first started this. I had no idea that banks charge us on the TIP, not the APR, which is deceptive.
Which
at
is
best.
the reason why right. Which is the reason why I've said this a couple of times. And I've told my clients who just bought a house, if you've got a mortgage and they're like, I heard if I make, I know I'm going to say it wrong because my brain's not thinking, but it's an extra mortgage payment a year.
Yeah. It's like the 13 instead of 12. Yep.
Yeah. So if you make one extra mortgage payment a year, it cuts, and I don't know how many years because I can't remember, but I have it written down to remind myself when I go to buy my house. It cuts how many years you're paying on the mortgage, because it cuts how much interest the bank gets. And I use this almost the same analogy to my vehicle, because I make sure that I'm paying more and I can say apply it to principal, and it's just constantly knocking my balance down because, again, I don't want them to get more money.
Correct. Yeah. Bankers are nice people, but the banking system is not for our benefit. Yes?
No, it's not.
Yep.
So what is something that they need to look at when they're looking at their debt to see what they should tackle first? What is just a tip for them so that they can at least start?
Yep. So again, I'm a visual learner, so I kind of go with this. So let me give you an example. That would be kind of hard to see, but I'll give you the basics of this. So what I did is I took the average. This is Gen X Rachel. Gen X Rachel has about a $277,000 mortgage. She's got about $71,000 in loans, whether that's a car, student loan, something like that, about credit cards. So $8,000 in that. So about $357,000. And then dual income, different things like this. I'm kind of skipping through because I know some people can't hear this. Basically, at the end of the month, for Gen X Rachel, this is just an average, she's got about $2,500 that she can put towards her debt to pay things down. I understand that's not everybody, but the more fuel you have, the faster we can do this. The idea looking at these three columns here, so to answer your question here, is my buddy says you cannot tame what you cannot name. If you don't know there's an issue, if you don't know how much you're paying in interest, you're just going to continue going on your merry way. So first we have to start with, what is the reality? How much is the bank actually charging me for this 30-year loan, or for this car loan, or for this student loan? Okay. So that's the left-hand side. So the bank's plan for the $357,000 in debt that they have is to pay back $617,000. $617,000. Now, this is not a magic wand, right? You're still going to pay some interest, but if we can shorten that map, the part that I didn't say about our long winding journey is there's a way to do that the fastest way, right? If we can do that in a fastest way, then we can cut off $185,000, which is substantial. Wow. Okay. The other thing that I love, because money is great, but money you can get back. You cannot get time back. What if that 24 years of payments was reduced to 6 years and you have almost 20 years back with your family, being able to travel, not having to be worrying about your debt? How much would that mean to you? So,
yeah, time and freedom is everything.
Exactly right. Exactly right. And then this last number is just talking about the fact that if for the last 18 years, you took the money that you were using to service your debt and you just put that in a 1%, which Lisa Marie will not steer you that way. There's much better ways to get money back on that. But on the low end, that $3,100 per month for 18 years is over $1 million. So the reality check that I want to just let people know of, again, there is a better way. There is a faster way. It's not magic. It's just math. And banks will not tell you this because that does not help them, right? They love the long payments. This idea of a 50-year mortgage is absolutely bonkers that people are talking about that being a good thing. So my idea in this as a former educator is to educate, to bring the message. Those that are interested, I love to have conversations with. We identify if this is a good fit. If not, then I try to give them some other, little bits of wisdom and that kind of stuff. But
Right.
understand that you don't have to be in debt the rest of your life. There's a faster way.
Yeah. Okay. So thank you for showing that. So now my next question for you is, because a lot of what you do I know comes from faith. And so I want to know, how does faith shape how you teach
Mm.
people about money and debt?
No, I love that. And the short version is I was called into education from a very early age at a church camp. So I was a teacher, and then I'm still own and operate an educational technology company, which is how I use this really, really cool piece of technology. But when I left the classroom, left the schools, it felt like a big piece of my heart, a really big piece of my heart was kind of left in the classroom where I wasn't making like heart to heart connections. Like I'm still working with people. We've got some great programs that make a difference kind of by proxy, three levels down. But I personally just miss that heart to heart connection, those light bulb moments, those aha moments. So to your question, I love the blessing and the honor that I get to speak with people about their finances. We incorporate, if they are believers, we incorporate biblical wisdom about that, kind of like the talents and the different things. God doesn't want us to be in debt. The only debt that he wants us to give is to give back to others, right? So I do incorporate that for the folks that matters to. But, sharing the idea of stewardship and honestly hope, I think that's probably the thing that is the most fun message that I get to share with people, is people that are just like buried in debt. And it's going to be like 30, 40, 50 years before they're out of debt, to show them a way that they can do that in a fraction of the time, save a bunch of money, start saving for retirement so they actually have something to look forward to. There's honestly, I have not found a feeling like that in everything that I do. And I just absolutely count it as a privilege and a joy.
I love that. My last question is, and I think it's a really important one, is what do you wish people knew earlier about money and peace?
Ooh, that's you. I was thinking money, and then you threw peace in there. So that's kind of a whole different thing here. Okay, so now I got to collect my thoughts. That's a really good one. You curveballed me on that one. Money and peace. I would say, one, keep at the forefront. Money is a tool, right? It's not something to hoard.
Right.
It's not something to just spend frivolously. Think of the talents. Be a good steward. I was just talking to a really good friend of mine. Side note here, but I'm excited about this. We are developing a faith-based workshop here locally, and we're going to call it Empowered Stewardship. I'm so excited. I think that's just such a cool combination of those two ideas, right? So be wise with your money, right? Understand that you need to, whether it's from myself, whether it's from Lisa Marie, get, and this is biblical as well, get the wisdom from many counselors, right? I would just caution that if you're only going off of the bank's plan and you never ask questions and you never look at the terms and you never do this, understand where they're coming from, right? Yes, they're lovely people. Yes, they're kind of thing, but there's a reason that the banks are the nicest buildings in town, because they make money hand over fist on you, on your interest. Okay. Yes, you sign it. Yes, it's legal. But let's, again, peel the scales off of your eyes, look at it, find out what it is. Okay. Again, back to you cannot name what you cannot, you cannot tame. Cannot tame what you cannot name. So figure out how much it is you're paying on interest. Ask questions. How can I figure out a way to get out of this debt faster, to start keeping more of my money, doing more with what I want, being a good steward of that, and don't accept this idea that you're just going to be in debt for the rest of your life.
Right. And I love that, because y'all know I talk about not only, okay, you're making it, now let's manage it so it can multiply. And multiply means multiplying it so that you have it for what you need, and also so that you can make an impact in the world and give back and do all the good things. So that's where that multiply comes in. So you and I speak basically the exact same way. We just say different terminology, and it's really the same thing. This conversation has been so grounding, and I love it, and empowering. We're using those two words again. especially for people who feel like they've been carrying money stress forever. And
Right.
one of the things I tell people is, you know, understand that if you're not learning how to manage your debt now or manage your money now, having more money,
Mhm.
if you're in debt, having more money and
Mhm.
you don't have that stewardship to manage the money you have, you're just going to go into more debt. So
Yeah.
we want you to, okay, what do I do with what I've got now so that I pay down the debt and I'm being a stewardship and not going in further in debt so
Right.
that when more money comes in, I'm not digging myself a deeper hole, because so many people think more money fixes it. But if
Right.
you're not changing how you're looking at the money and building a financial GPS or building a money roadmap,
Right.
then it's not going to change. And so I love that this has been such a grounding and empowering conversation, because I can talk about money all day.
Mm.
Where can listeners go to get their free Empower Wealth game plan? I think that's what you
Yep.
said, and I'd love for them to be able to know where they can get it.
You bet. I don't have my QR
Oh,
code.
this is just so cool.
So the easiest place to find me is empowerwealth.solutions. So it's not .com, empowerwealth.solutions. From there, there's a get started. Takes me right to it takes you right to my calendar, and then we can have a conversation. I hope that you understand and got to know me a little bit to know I am an educator at heart, not a salesperson at all. I love to educate, give ideas. I literally had a conversation last night with a couple here locally that we got to the end of the conversation. I'm like, this is not a really good fit, right? Try this and that. But like, if it's not a good fit, I promise I'll be the first one to raise my hand to do this. However, if you do have debt and you are wanting to pay that off faster and not live in debt the rest of your life, I guess the thing that I want to just leave folks with is work smarter, not harder. Okay. Can you still use a paper map and get across the country? You can, right? But it's not going to take into all of the accounts, all of the
I don't
dynamic
know how to
inputs,
read one.
right? Right. There's that too, right? Don't work harder than you need to, right? Leverage technology, leverage things that makes your life easier and gets you out of debt and has your best interest at heart, not
Right,
the bank's.
right, absolutely. And if this episode has you realizing that your personal money systems are affecting how you lead, how you decide and grow, then it's time for some clarity. Book a wealth alignment call with me. We'll look into not only your personal, but in your business finances. We'll work together so that your money is supporting you, your life, and your legacy. The link for my stuff and for Andy's will be in the show notes. And until next time, remember, confidence and cash are the ultimate duo. So make sure you go check in with your money. And as always, I hope you have an awesome and wealthy day. Till next time.